Finally, some good action and individual issues on the quad witch. Turning point after the quad witch. Are we ready to barrel through 4,800 and just keep on going? We'll discuss that with Tim Quast at 8:35. And whoever was buying X in the 30s, they got one heck of a deal. Taken out at 55, a bidding war in X. It's Monday. It's pre-market prep. Let's get it started.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
All right, starting out in the green at the highs of the pre-market session, up 12 and a quarter handles, 47.80 in a quarter. The buck is a little bit in the red. That's down 4 cents. Bonds not moving up much, up a few ticks, just under 124. Crude getting a bounce up $1.30 at 73.08. Gold in the green by a couple bucks, right under 2,040. Silver up a dime, 9 cents, 24.24. Bitcoin futures under pressure today, down $1,375. And to make Dennis happy, I'm going to say the IWM trading up 0.47%, up at 197.50. And we know where the Qs. Well, the Qs are a little bit in the red. Triple D, happy weekend, or I hope you had a good weekend. Did you have some fun on that quad witch expiration? Were there
It was
any
wild.
inefficiencies? It was?
Yeah, no, there was a lot of movement on the quad witch. That's the wildest one we've seen in a long time, especially at the open. But even on the close, like check out the opening price of Berkshire Hathaway, which was trading relatively flat. So we got to give you some perspective. Where's the S&P when we opened? It opened pretty flat, did it not?
Yeah. Yep. Very flat.
Yeah, and then you had Burke open down $4. So that was just a huge opening sell imbalance. Like, boom, Berkshire Hathaway prints down $4. I get long off the open because I like to do the old Don Bright on the quad witch, enveloping where fair value is. Trying to avoid news, obviously, but I got filled on a lot of stocks. I got filled long Berkshire Hathaway. I got filled long Microsoft, which was a fantastic one. Reason I got filled long Microsoft, it was trading up the entire pre-market and then basically opened flat. So I'm like, well, they're going to trade up the entire pre-market and then give me a flat open. It's probably going to run straight up. And Microsoft basically opened at the low tick and just ran straight up. Like, I mean, you can't even see it on that chart there. But
yeah,
actually,
let me. Yeah,
it's a weird chart you got going on again.
That's the one that you wanted. That's the 30-minute. But here's the open, right here, this bar right here.
Yeah, so straight up from that open, I'm just trying to see where it is. Oh, yeah, because you've got the overnight there. So, yeah, that's straight up. And it went straight up. Microsoft, just keep looking at these. All the same story. They opened and went straight up. I got long Coca-Cola, KO. I got long AT&T, opened straight up. Went straight
was
up.
that right?
Long,
Did they open? Wow.
Coke
Big open.
Way down. Yeah, look where it opened. Way down that low tick. You see there? And boom, instant like money there. Coke, I got long. Oxy, I got long. I'm just going through, my list because I wrote them down for you guys. I think NEE, I got long Pfizer. It was mostly buys, as you can see. Stocks just opening simply too low and obviously taking advantage of that. But then on the close, we had some crazy prints too. Check out BlackRock. Look where BLK closed, gapped up 19 points on the closing print. Yes, it's an $800 stock, but it was around 802, 803, and then gapped up to 819 on the closing print. It's trading down to 810 right now, if you want to know why, because it shouldn't have been trading at 819. It was just a big buy and bounce pushing that close out. These are the inefficiencies I talk about, folks. Like looking at, where a stock is trading right before the close, and then boom, it goes like this on the close. Well, that's all order flow related. You don't see it like you used to see the stuff all the time, but you do see it on the options expirations, and it's good to take advantage of that. Merck, same story. I got long Merck on the close. MRK, gap down about 80 cents on the closing print. And it was like a few minutes after, it was like 403. I was like, whoa, I just got filled Merc. And then I look and it's bid 105.80. I just flipped it out. I was in the trade less than a few seconds. So, there's opportunities there and you got to take advantage of those opportunities.
I just want to say one thing about this BlackRock, and I think I saw it out of the corner of my eye. And maybe it wasn't BlackRock, maybe it was Blackstone, but someone put out a year-end video. I don't know. You probably didn't see this. I should check my information,
No, I
but
didn't.
it went viral, and the company, it was one of them. It was BlackRock or Blackstone. But let's bring in Aaron Bree, and he's sitting in for Mitch. He's taking a couple days off to start the week. Aaron at the world headquarters. Aaron, how you doing today?
I'm good. Good morning, Joel and Dennis. Good morning to the rest of the Zinger Nation out there joining us this morning on pre-market prep. But yeah, Joel, that was Blackstone.
Okay.
Yeah.
That news.
It was just that video. It was going viral on Twitter, and I think it might have actually been from a couple years ago.
Okay.
But for whatever reason was going viral this year. Actually, no, it was 2023. Okay, Blackstone video. I've got it pulled up on Twitter here. So maybe later in the show, if we've got a few minutes, we can play it.
It's not market moving. It's not market moving information.
Well, biggest headlines of the morning, of course, you mentioned on the top, Joel, X. And no, we're not talking Elon Musk's X.com. We are talking U.S. Steel. Got a $14.9 billion offer from a Japanese company, Nippon. Shares were trading up 28%, but still off the target share a little bit of $55. So it seems like the market's saying, okay, there might be some potential problems here in this buyout. It might not be that clear because otherwise I think it'd be trading a little bit closer to that $55 a share. Where are we at right now, Joel?
50.5. But Dennis, I'll let you make comments on this because I remember talking about this one with you, a while back. And a lot of times we say you got to strike. When something comes out and there's a pop in something, it's a lot of times it's best to exit and see what happens. Well, this exact opposite in this one, I can't remember this happening in a while. Drifted higher.
Yeah,
Someone
they
got,
just knew.
yeah, they got the memo last
They
week.
knew it was eventually coming. So I think you've got to ring the register at this point. I would have rang the register before just because it was up so much, but I think like into it. But I'm like, is this like so Nippon Steel is Japanese?
Yeah.
Are they gonna like just let this like no problems go through? Let's come let the Japanese steelmaker buy the U.S. steelmaker. Like, I mean, we're 450 off time value of money in there, but I'm surprised it's even this high. Like, I wouldn't want to take a shot at 51 with your best opportunity up at 55. How high did it get you? 52 we got to?
We're trading right at the highs right here, right
almost
now.
52 it looks like it got to early right on that news. But I don't know. What do you think, Aaron? Like, I don't think it's just clear sailing for a Japanese company to come in and buy one of the biggest U.S. steelmakers.
Right. I think right now, I mean, what you're seeing still trading off like 10% from what the target, clearly the market's saying, hey, this isn't a done deal. This isn't, a for sure thing. And it kind of goes against what a lot of the current administration has been trying to do in terms of onshoring jobs. If you think about, trying to build new semiconductor manufacturing plants and bringing some of those jobs back instead of just relying on Taiwan and all these Asian countries to produce everything. So, I think maybe that could be part of it. And I'm saying, hey, no, we're trying to keep these American companies here and keep these jobs here. We don't want to just move everything offshore. So I don't know. I mean, that's the only thing I can think of off the top of my head.
So what I'm challenging, and I'm with you, and I think, we got a little bit of a discount because of that, but you also have the time value of money. But I'm actually surprised the discount isn't more. So 50, 50, 51. I'm like, I'd ring the register here. But again, I've been wrong on this. I'll admit I've been wrong on U.S. Steel because I didn't think it was going to get a takeout price at this high. Right. I thought it was taken out. It was going to be like 45, not 55. So very much surprised me how much. I would have rang the register probably before the deal. So, which I said. So I've been wrong, but I just feel like you're sitting around waiting here now. I think this is your opportunity to say thank you very much. Congratulations. Take the money and run.
Yeah, that's interesting. So Dennis, you see the price action, you're thinking, hey, this is actually pretty close to the buyout target. The market's feeling maybe pretty good about this deal happening because of course it wouldn't expect to close for a few months anyway. So there's going to be a slight discount there just from the time. Whereas I was looking at it like, oh, it's still trading 10% off again. So probably going to be some hurdles, probably going to be some regulatory things. I
A
wouldn't be
lot. I think a lot.
a
I
lot,
Yeah, I
mean,
do
right?
too.
yeah, the SEC's been going after like iRobot and Amazon.
I know.
I mean, and
They're
they're
not
gonna
gonna.
give me a
Yeah,
break.
yeah. Like they're not gonna come in and say we're letting a Japanese steelmaker buy, one of our big manufacturing companies here, U.S. Steel with U.S. Steel in it. They're gonna let that just slide through. Man, maybe it gets through, but if they're worried about iRobot, I mean, I don't know. I don't want to see our, the U.S. steelmaker. If I was, sitting here, I'd be fighting that too. So I just think you're going to have antitrust issues here. I can't believe it's trading at 51,
You know, a fun fact I learned
50 and a half.
while researching this deal. At one point, U.S. Steel was the largest corporation in the world.
Wow, that's a
And
fun.
now it's getting bought out for 15 billion, or that was the offer. And if you think about, I mean, what the market cap of Microsoft or Apple now, over 3 trillion. It's like less than 1% of those market caps now. And again, at one point, was the largest corporation in the world. U.S. Steel was, probably sometime back in the 1800s, if I had to guess.
Crazy.
But either way, I mean, yeah, this is going to be the big headline of the day, at least so far in the pre-market. So we'll keep an eye on this throughout the show.
Yeah.
Yes,
And
sympathy
again, I don't
plays.
think we're going to have more information breaking here. These take time, but I think you're going to have some commentary here. 20, I just looked how many workers, 22,000 employees. So it's not like it's, hundreds of thousands of employees, but it's still significant. It's just the name too, Joel, like U.S.
I
Steel.
know. I agree.
I mean, yeah, if you're like a politician and that name U.S. Steel, it's like, we're not letting them take U.S. Steel to Japan Steel. I don't know. That's why I think you're going to see some fighting here. But risk herbs aren't pricing much in. So that's why I take the money and run.
Steel Dynamics,
Yeah.
which I own, is up $5.50 on this. 6,000 shares, not near an all-time high. Also, Nucor, that's trading up $6. That's
Yeah.
not quite an all-time high. And then there's one other one. Isn't there a
Well,
smaller one?
let's talk Cleveland Cliffs, because Cliffs was
Yeah.
one of the bidders. They were one of the potential bidders for U.S. Steel, and they're obviously not, buying it. They're not, they were rumored to be one of the bidders originally there. So you get CLF not buying. Now all of a sudden it could still be a target because it's smaller. So I think, I'm surprised it's only lifting 7.4% on this. So big pop here for Cleveland Cliffs. A lot of dynamics to think about. I mean, Nucor, nobody's coming and buying Nucor, but maybe some people were thinking maybe Nucor will be the suitor and they have to pay that big premium. So that's why, NUE probably trading higher here as well.
Yeah, just some additional details. Yeah, the deal with JP Morgan and US Steel in 1901 made Andrew Carnegie the richest man in the world. And at that time, US Steel was the biggest corporation in the world. Obviously, things look a little bit different 123 years later.
For sure.
Joel, what chart are we looking at now?
Oh, I was thinking other steel companies, and someone mentioned Alcoa.
Aluminum.
Yeah, aluminum. Yeah, excuse me, aluminum.
What a move
I
in
mean,
Alcoa, and
yeah.
obviously we're talking metals now in general here, but 24 to 32, 3 days, been a big move too. It just goes to show you how violent the rotation has been from leaders to laggards. And Alcoa has been one of the biggest laggards of the year. And, often you see this January effect where they turn, but they have turned ahead of time here. And you just keep thinking, like, I look through the laggards, and that's what the trade is right now. Biggest laggard of them all is Pfizer. You wonder if Pfizer doesn't start getting some love here too. Not that it has anything to do with any of these companies, but it's clear that this market is searching through the market for laggards and thinking this is where I'm making my 20, 30% in a hurry. You watch what's happened in the solar stocks. You watch what's happened just in Alcoa, even all these stocks that were sitting near 52-week lows just a few weeks ago are blasting off, some up 25, 30% in very short order here. So I think you're still looking through laggards. Chat will throw it to you too. Think about some good laggards, especially for the January effect here, because some of the laggards have become leaders all of a sudden. So, that screws up your January effect. But if you can find those stocks that haven't moved yet, there still may be some opportunities here. Now, Pfizer is going to blast off 30%. It's a huge company, lower beta. But there's got to be some other ones out there as well. Let's think about that.
Well, a couple, Dennis, that come to mind that might not be lagging anymore, but have been lagging. Snapchat
Oh
Was
boy.
trading around
Yeah.
$10 like all year, and then all of a sudden the last couple of months has basically doubled.
Yes.
And it just caught another upgrade. Let me pull up the details on that. But Snapchat had been one. This is like the classic case of I had been watching this stock. I'm sure you guys understand this feeling, but I had been watching this stock for like 3 months, been like, yeah, maybe I'll start building a position. It's still getting beat down. And the next thing I know, I look at it, it's up 80% in 2 months. And I'm like, man, I don't know if I can I don't know if I can buy it now, but
I know.
Guggenheim just upgraded, raised a price target to $23 a share. I mean, looking at this chart again, the stock's up big time in the last 3 months. I want to say like 80%, but it's still 85% off its high. So when you're looking around the market, a lot of stocks aren't still that far off their highs. So when I'm looking at it based on that, do I think it's going back to $80, $90 anytime soon? No. But could it go from here at $16 up then to 20 or 23 like Guggenheim
Yeah.
just put its price target at? Yeah, maybe. So I'm going to be continuing to watch this one. I don't know if you guys have any thoughts on this chart or this story right now.
I think it's run a long ways, and it is hard to chase here. We look at a stock that started the end of October, so 2 months ago at $8. So you're up 100%, more than 100% in 2 months. But Guggenheim thinks there's more. The momentum is clearly on its side now. You could take your Jeff Mackey purple crayon and draw the line, and maybe you're buying it off when it's to come back to that line. Again, I don't like chasing, but in some cases here, chasing has worked, at least in the last 6 weeks. So, it's just not my style. I think you're going to get some pullbacks here eventually in some of these names. These aren't stuff I'm looking to add to my long-term portfolio, but you cannot argue with the short-term performance. The laggards have become leaders, and the leaders have become laggards.
Yeah,
I mean, we've seen this so much on the monthly charts. I mean, where you see something on the daily, you're like, oh, this is so overdone here. And, $9, $8.50, 18, right? But then you look on the bottom chart and you're like, well, man, this thing was a $80+ stock. So just the short term technicals on this one, you had a pair of highs at 17.23, 17.22. So I call that, see if you got a gap fill, or if you're trying to short this off the open, you better watch out for some bids there. Pre-market high, we did spike over 1760, but there's just not when there's nothing on a monthly candle, I just don't like to try and get in the way. Nor do I want to say, yeah, well, the next target is 3019. That was your May 2022 high. So it's just your perspective, your time perspective on things. And they're saying, what, psychological $20 level? I mean, what else do you want to
Yeah,
use?
I like that a lot, Joel. I think $20 if you were going to play a swing trade here would be a good price target, and you could even, set some tight stop losses and say, hey, either this thing's going to keep running for one more week here, a couple more weeks, or it's going to start giving up some of these gains, and you should know pretty quickly. Just a quick note on the story, kind of what's going on with Snapchat right now. The stock had gotten crushed, along with all other social media stocks, but in part because the fear is the company was losing a lot of users to TikTok and people were spending time other places.
Yeah.
Users that actually stayed pretty steady at Snapchat, actually up to 750 monthly active users. And this is mostly young people, which is what the market likes. Because if you have, young people that are on your app, and that's better than having people that might not be there for much longer. But I think it's almost a detriment to the company as well, because the user base is so young that advertisers don't really get a lot of conversion. Because if you're advertising on Snapchat, but it's a bunch of 15, 16-year-olds that don't even have money yet to buy the products, but it could be some sort of, similar to Facebook, where Facebook struggled for a long time. It had a bunch of users, but wasn't really monetizing it well. And then over time, eventually started monetizing its user base better. If something similar happens with Snapchat over time, I could see it being a good long-term story. But right now, I wouldn't look at it as anything other than a potential swing trade.
Chat throwing out all the pot stock names as laggards, and I'm telling you, and multiple people in the chat talking about it, it does come to mind they have not moved. So CGC. The problem is I think a lot of these are going bankrupt. So, I mean, it's like the hot potato trade. Can we get that like 50, 60% pop, or maybe even more, maybe 100% pop, before the inevitable bad news on some of these names? I don't know. Like CGC, the darling of the industry, is sitting here at 52 cents. And obviously the all-time high is what, 60, or I don't even know where it is, Joel, now. The all-time high, I think it may have.
Oh, it's over 55. It got to 59 and a quarter.
The ultimate laggard trade. The ultimate laggard trade is the pot stock names. I wouldn't want to be short them right now. So they're sitting here in the lows, 50 cents. I don't short 50-cent stocks anyways, but Tilray looks productive. I mean, Tilray's $2 here, Joel. All-time high is 300. Kind of looks like it's itching to go here a little bit. Could Tilray break out? And again, maybe there's bad news that comes out, government regulation, all that. But, these stocks have just been absolute dogs, the dogs of the market, and they haven't participated at all. So maybe take a little flyer, speculative capital. Maybe we could get a lift. I don't mind the trade.
You know where your risk is, right?
It's to zero. It's to zero on all these. They're all call options. You don't have to buy call options. You can just buy the stocks on these things when they're 50 cents. Don't worry about calls. You just put 50 cents. It's a stock. It's a call option in itself. Tilray, $2. It's basically a call option. ACB was another one. So basically a call option.
Oh, man.
Well.
Actually, I forgot. Like when I try and pull these stocks up, when people ask me about them, I do have the great memory. I don't like they're not even registering. Like there was Aurora Cannabis.
This GRWG is a big one in America. Like, look, they're all $2. Holy, everybody lost a lot of money on all these things. But I mean,
I could see the market rewarding some of these stocks just because, like you said, Dennis, I mean, people are looking for laggards right now. People are looking for the names that haven't moved. But from a basic economic sense, I think what you've seen happen is there's a really low barrier to entry into this market for companies that want to start growing marijuana and selling it. And what you've seen is just kind of a surplus of supply, bringing prices down in a lot of these markets. I mean, I know here in Michigan, I've covered this a decent amount where over time these growers have had to start selling their product for less and less and less because there's more and more competition to the point where a lot aren't very profitable. So I don't necessarily love these long term.
The story is horrible, AB. This is not like long term investment.
Right. This is just because the market might run these up a 30 years. That's all. That's all we're talking about.
That's why I call them hot potatoes, because I think a lot of these end up at zero. But is there this moment where they're buying every laggard they can find that they have forgotten about the pot stocks? I think there might be. But again, you get states, you got government regulation, you have so many wild things. Kronos is another one, CRON. All these things are sitting near the lows. They have not participated at all. So it is the ultimate laggard trade. We're just throwing it out there. I don't have any of these names yet, but keep an eye. They start to show a little bit of life. Maybe you can get some momentum going. Maybe you don't want to be the first one to strike. Maybe you want to move up like 7-8% before you start striking. But I think it's interesting. I think
what's going on in your hometown, Dennis? Remember, I know you do the old. If I had
to Leamington,
Leamington. If I had tomatoes or I had pot, what would I rather have? Tomatoes or pot? Are they?
Well, Leamington's full of greenhouse growers, and a lot of the tomato growers went to. And this is why when I was saying, that some of these pot companies worth billions of dollars didn't make any sense. I'm looking at a greenhouse full of pot plants. I'm looking at a greenhouse full of tomato plants, and you're telling me the greenhouse full of pot plants is worth 1,000 times more than the greenhouse full of tomato plants. It didn't make any sense. Eventually, in the long run, I was correct. It didn't make sense of why these pot stocks came down. It's got to make fundamental sense. Yeah, the pot stocks are worth more. They're not worth 1,000 times more because these greenhouses, that's worth 5-10 million, that greenhouse operation. Well, this one's worth $1 billion because it's got pot plants in it. That made no sense. That's why eventually they were going to come back down, which they have. But what we're arguing here is not fundamentals. Forget about the fundamentals. We're arguing pure laggard trade. The pot stocks are a hell of a laggard trade.
I can get behind that. Disconnecting the story, the fundamentals from what the market reaction is going to be. Joel, unless you want to stay on pot stocks for a second, I want to ask you guys some help in kind of deciphering this news that I've got coming across my desk right now because I don't know if I'm fully understanding it correctly.
Okay.
So, headline that the BP is diverting its shipments through the Red Sea because there's been some attacks from, I guess, some pirates or something down there. They're from Yemen rebels. The world's largest shipping group, Mediterranean Shipping Company, MSC, has announced it is diverting its ships away from the Red Sea because of an increased threat of attacks. BP also made this announcement, but BP is trading higher. BP is trading up this morning pre-market on the news. Zim, another shipping stock, is trading higher. What do you think why do you think the market reaction is positive on this news? Is it because supply is going to be more limited if they're not going through this channel in the sea anymore, and then that could help bring the price of oil higher? I don't understand the market reaction.
I can tell you why BP is trading higher because they don't care about it. They don't care
Yep.
about this headline whatsoever, AB. It's too small. BP is such a large company. This is a minuscule little piece of the pie for them. So it's being completely ignored by the market, and oil is ripping today. So that's why BP is trading higher. Now, Zimmer could be trading up on this, and it's an interesting headline. You get the Pirates going through, and Zim is actually one that has been going up here. So, that's, interesting in itself here. But yeah, that's why, AB, it's just too small for that company of size of BP to care about. So BP and every other oil stock is up basically 1.5% to 2% here this morning. BP obviously trading over in Europe, so it's already
Just on the price of oil.
Yeah,
Yeah.
purely on the
Yep.
price of oil. Oil is ripping here this morning. We're up fairly significantly.
Yeah, I
know
wonder
US
if the
oil
I wonder if the
is
Zim I wonder if the Zim investors are hoping, oh well, if the other bigger companies stop going through this sea, maybe Zim will keep doing it, and that'll help give it a boost. I'm not sure. Maybe they're just continuing to run it up. But either way, saw that headline across, like you said, interesting headline, but maybe not the most market moving this morning.
And
What
Zim,
did
keep an eye on that Zim, because we're talking about laggard trades, and maybe you have a catalyst here, and it just broke out from 8 to 10. Gets above the 10, which it is. It's always interesting too. Now, I mean, you're chasing it a bit. It's down 20% or 25% in 2 days. So there's always major risk when you're chasing like that. But it's interesting. I look at that. Maybe there's a headline there to drive that small company a little bit more. Zim get rid of their dividend? Because
I was just going to try. I was just
in this thing. They kept preaching to me. It's got a 90% dividend. How can you go wrong? They must have cut it to 0, eh?
Yeah, I'm not seeing any dividend yield
But,
on
yeah, I
my
don't
on
see
my
any
thing.
dividend
So
yield. I'm just going to the news. Zim dividend. We'll just ask Google dividend cut. Did they cut it? Yes. Zim's services dividend cut came sooner and deeper than expected due to strong profitability headwinds. We're looking at back in October. It looks like they cut the dividend, and it does look like
wow.
I don't know
Yeah.
if it's 0, but yeah, it's suspended. It looks like it has suspended the dividend. So
It did. That is just
you got 90% dividends. There's some risk, folks. It's not just free money.
So, talking about rotation, I mean, the past couple of weeks, oil's been getting crushed. Tech stocks have been doing great. With oil trading up this morning, Dennis, do you think we could start to see maybe an outflow of tech into some of these energy names? Maybe value stocks do a little bit better today. How are you viewing this? The oil price increase coming into Monday trading.
I think it's a laggard trade here as well. I think people are still searching around and looking for what hasn't gone yet. And oil is sitting down near the lows, and they're coming in here over the weekend. They're saying, well, we can clearly see what this market is doing. It's buying all laggards. What lags more than oil? Again, it's fundamental news is driving it, but oil stocks themselves have lagged even to crude. I mean, these are laggard trades. So you got to be aware. Being short laggards, being short anything right now is super dangerous, because one, with the seasonality trade, Santa Claus rally starts in a couple days. Not that necessarily is going to continue to boost it, but I don't see why it would derail it. And I think you just got to be looking at, it's just if saying, well, this company's weak, it's got crappy fundamentals, eventually going bankrupt. That could be the case, but when the laggard trade gets hot, fundamentals don't matter, folks, and that's what you got to be careful of here. Oil stocks are all laggards, so I think even when you get a slight little positive headline coming from anything, there's going to be that flock of investors coming in saying, hey, maybe this is the turnaround story. Right now, people are looking for turnaround stories.
And what about Warren? Warren given the vote of confidence, another vote of confidence on Thursday, right? He showed that purchase. You saw the gap up in it. It actually ran after the open on Thursday, so that you had a pretty good opportunity. Came back a little bit in on Friday. It got a gap now to fill here down to the lower to 57.27. But now with the turn in oil prices, don't know if you're going to get that. But Warren, the big catalyst on this, and then also just going to the the oil and what's going on with the attack. This is not the first one, right? This has been going on, and I think this is just kind of underlying all the Middle East tensions. And this is something that, with the war that's going on, the escalation and stuff. So there is, there is some kind of political impact to this, but as Dennis said, BP, big company, a lot of things. But the geopolitical concerns of the Middle East and everything certainly don't seem to be bothering this market at all.
One consideration, just going back to the laggard trade, though, is you still have tax loss selling coming in on some of these stocks. The laggard trade normally starts working January 1. It has been front run here significantly in a lot of stocks. So just be aware that these stocks just don't have to, rip higher here. January 1, it'd be more interesting if they just kind of stayed where they were until January 1, and then you get like the better setup maybe. Because, we work on trade day. You have a lot of retail traders in a lot of these stocks. And probably some of them, it's been a pretty good year, might be sitting on some gains and saying, look, I could realize some losses on this Canopy growth stock here, and then obviously and not pay as much tax. So that is one thing that's working against these stocks for the next 8 or 9 trading sessions. What do we got left? 8, 9 trading sessions? 5.
I don't think
Couple
that
days
many. I
off.
mean, we got
Let's
to
look at the calendar. Feels like 8 or 9. 9.
yeah, 8.
8 trading sessions left. So that's a lot of sessions. Still some tax loss selling coming in there. So just careful with the laggard trade. You don't want to be too early.
And then with the oil, I mean, as someone who's holding tech stock still and everything, I don't hate to see oil coming back up here. I mean, like you said, there's geopolitical tension, all these things that can help drive that price higher. But if we see sustained rally in oil this week,
Inflation trade. Yep.
that's going to tell me that the market's not as worried about, a big drop in demand or a recession in Q1 2024, which, again, I don't think that many people are feeling that scared about the economy or market now that we're trading at all-time highs. But you still had Powell talking about that, we haven't seen the full effects of rate hikes, that we're going to see more layoffs and stuff. So if we start seeing oil continuing to move lower and all this stuff, that I might start thinking, hey, this slowdown that people have been expecting for a long, a year basically is finally coming. But as long as oil's ripping, that's telling me that investors are not at least immediately concerned with this potential of a drop in demand for oil across the world that would be associated with an economic downturn. So just something to watch. I think the oil prices here definitely worth watching as always.
And everything has changed to a certain extent here, just with, again, Powell's speak last week, where I was under the impression they would not start lowering rates until we started seeing economic data start to slow, which we have not seen. And Powell was saying otherwise. Now, Williams came in and said that is not the case. So that changes things a little bit to a certain extent. But holy cow, I mean, we've got to be careful, being short anything here right now. I just think we're in this market here where you've got to be very careful playing the short side.
The thing is with the oil too, I mean, if it, it's a component of inflation too, and Powell and whatever projections they made that we whooped inflation, it's one component of it. So that's one thing. We don't get any more inflation data until the middle of next month, but it's one component of inflation. And now that we've already whooped inflation, we skipped the pivot. We just went from raising the lowering somehow miraculously in one meeting. So that's one thing, that a longer term that can consideration for the impact of inflation.
See, when I was listening to Powell last week, I was kind of trying to always, read between the lines, see what he's trying to say. It sounded to me like when he was talking about rate cuts, it was on the backdrop of, again, he was still expecting this upturn in unemployment and some sort of economic downturn, to the point where I think if we see employment numbers continue to be very strong, labor market to be very strong, and inflation doesn't come down at all, I think Powell will end up being more hesitant to cut rates than what he was talking about last week. I think he's still expecting, but Powell's been saying this for a year and a half. He's been saying, we're going to see pain in the labor market. We're going to see pain in the labor market. And it's never come. So I think he's still kind of thinking, okay, hey, we're starting to see more layoffs. We're going to end up cutting rates in Q1 or Q2 of next year. But if we don't see those layoffs, then maybe not. But again, I still kind of heard that from him last week, that he was expecting at least, the economy to cool down a tiny bit. But obviously the market didn't really interpret it that. The market just took off and ran with it, which is, hey, if you're long, then you liked it.
And again, what, surprised me, what we were reiterating just from last week, is that I didn't think the Fed was in the prediction business. I thought that they were in the data dependent business. So it sounds to me like, to your point, AB, is that they're kind of predicting the slowdown here and they're trying to get ahead of it. They don't want that data to start. They don't want that unemployment rate to start ticking up. And don't forget about the election year. I mean, it is an election year, and that has a lot to do with it here too. So we're going to come into 2024 into an election year. They don't want the economy to start falling off a cliff in an election year. So they're going to, basically behind that too. So the timing of all of this is very interesting.
I guess, but I think I disagree with that, Dennis, because people always say that but it's Powell was appointed by George H.W. Bush, was made the Fed chairman under Trump. Like, why would he have some legiancy to Biden and care about what that? Like, I think he's just looking at the economy personally. I mean, I could be completely wrong, but again, he's not to me like a big Biden's guy or anything. He was made the Fed chairman by Trump, so I don't think he would have the biggest loyalty to Biden in the world, but I could be dead wrong on that. I mean, he was Trump was obviously urging Powell to keep interest rates low before COVID because Trump wanted the markets to be hot. Like any president would want
Right.
that. But again, I don't know how much of that plays into it. But I thought with Powell, they might have seeing some data already that's indicating a slowdown. I mean, obviously they're looking at a lot of different things, and most of the data we get from the Fed or from the Bureau of Labor Statistics is lagging. But I assume they look at data that isn't all lagging, that like the stuff that we get later, the CPI and stuff. So maybe they're already starting to see some signs of a slowdown.
I think they're predicting. I think they're predicting and just trying to get ahead of it.
I think there's
their prediction won't be bad. I was predicting. I've been predicting on this slow down for a long time, which hasn't come yet. But I just know you keep rates high long enough, the math adds up. People have less money, so let's bring the rates in before they have less money.
You can't argue with the presidential election cycle, as well. But it just seems like 20. We the predicted that being predictable. The market 20. What's happened in 23, what happened in January, then the sell off, where we're at in October. It just feels like we'll have our seasonality plans. We'll have our presidential cycles. It just seems like this market just seems like to be throwing a lot more curveballs at us, and nothing bigger than what happened last Wednesday with Powell. I mean, totally changed the entire complexion of the market. Even though the bond market had been pushing them, right? The TLT and the bond market ahead of things, pushing it, but I predict 2024 will be unpredictable. It's a lot of different things going on.
Yeah, and Carmen with a good comment in the chat saying it might not be about Powell's loyalty to Biden. He might just not want Trump back. Who knows? But we're not going to get into the politics of it.
And again, there's more than just Powell there. He's not just the only vote
right.
We saw that on Friday.
So there's a lot. We saw that with Williams, the talk, and so there's multiple opinions happening here. But it's just when you line it all up, you got an election here, you got a lot of things going on. So it's all interesting.
So let's another big headline that came across my desk this morning: Adobe and Figma's deal officially falling through. Adobe stock last time I checked was actually trading up on this news, which to me, I mean, this is the market just does not know what it wants to do with this news, because when the deal was first announced, the Adobe stock crashed. They thought, oh my God, they're overpaying for Figma by a lot. And then once the deal was announced, okay, then it started going through and was like, okay, this is going to be approved. Then the stock traded higher, and it was like, wait, I thought you guys didn't like this deal. And now it's getting nixed again, and the stock is trading higher again. So either way, I mean, I don't think, this is going to be a make or break thing for Adobe. I think it would have been good for the company long term to have Figma. I think without it, then it's going to be fine anyway. But what's the market reaction right now, Joel, on Adobe?
They like it. I like. Well, you got to remember, Adobe got hit off earnings right on Thursday. Put a nice little double bottom in there. Missed it by. Or actually went through it by a dime, and it just kind of hung in there. Right, basically was unchanged on the day. You're gapping up here, so I mean, I can't give you any resistance until you get to 618. That's a long ways away. So what I'm thinking here is that people that did buy the dip on Thursday, bought the dip on Friday, not expecting this news. It's pretty, nice little quick 10-point profit. Let's get through the pre-market high at 597. Quick reaction. Dennis, your thoughts on Adobe Acrobat
leaders
software?
To laggards, laggards to leaders. It's hard to buy Adobe right now on up $10 here, because this has been one of the leaders of the year. And if we are in this full on, like where we're thinking interest rates are going higher, you've been hiding out in stocks like Adobe, and you've been selling all those solar stocks. So it's not the kind of stock that's getting bought on dips right now, which means it could be the kind of stock that is getting sold on rips. So I think I'm with you. Although, again, shorting anything in this market has been dangerous. The shorts have just been run over.
So, kind of related to Adobe, last week at the end of the week, we had news that DocuSign was
Ooh,
exploring
yeah.
a sale. And the reason they're related, I mean, Adobe came out with a feature that you can sign documents, using Adobe software. And that's why I never really loved DocuSign, because DocuSign's whole moat was based on this electronic signing thing. And then Adobe brings it out. You can now sign things on like your iPhone, just on Apple. So it's like, how valuable is, but could Adobe maybe come in and try to purchase DocuSign? Because, I mean, but then I guess maybe they would, probably some regulatory hurdles if they have kind of a monopoly on the electronic signing business. But either way, who would be a buyer of DocuSign down here? For, I guess just they want that the software of being able to electronically sign things. Could be Adobe, could be a big tech company like Apple or Microsoft, but stock popped last week on this news that
Yeah.
DocuSign is
And
exploring a
it's
sale.
not going back down.
No, it's
It's
not giving it back. So where's the PE on this puppy? Like, I'm just trying to get a feel for valuation, because one thing to consider, AB, is when
not
you're
bad.
talking M&A, when you're talking trading, you can ignore valuation. Stories hot, stuff goes. But when you're talking M&A, it's all about valuation. Companies are coming in and saying, well, it doesn't make any sense.
Yeah,
People were talking about Peloton getting bought out at $35 or $40, and I poo-pooed all of that because I'm like, nobody's going and paying $8 billion for, a company that is really struggling, for it didn't make any sense. So, you can talk hot stories and stocks can go up on hot stories, but typically there's got to be some type of value for a company to come in and acquire them. So that's why you want to look at DocuSign, go to your trusty Benzinga Pro, feel
22.
about the PE.
Yeah,
So it's not crazy.
Forward PE at 22,
Not crazy.
Price to sale of 4.8, so not crazy. But again,
Not crazy.
I think the fear would be that there's no growth, and that those earnings could even be declining for DocuSign.
Yeah.
But again, I mean, this could just be one to watch. We could see maybe an offer at some point in the next few weeks. I mean, I don't know how quickly this thing's going to turn around. Maybe they're saying, hey, let's wait a little bit on this while the market's not as hot. But yeah, just something to watch. DocuSign stock, like you guys said, not coming down right now, still trading up on that pop in pre-market trading this morning.
And you don't want to get axed, on this one.
No, not shorting it.
Yeah.
Can you imagine comes out, gets bought out at 90, and you're like, holy mackerel. Again, looking at the P at 22, looking at, maybe to your point, AB, is there's a lot of companies that figure they can do a lot with that. I mean,
my man,
it fits kind of in. I'm not against it. If the PE was 100, I'd be like, wow, I was paying
No way.
that. But it's not anymore. And they say the current PE, but the forward PE is 21. It's not crazy.
I think this is my guy Yeager from St. Louis. He's saying buyer DocuSign, my guess CRM, Salesforce. That's a great guess. I mean, that's probably
they buy everything.
Yeah, that'd probably be the front runner. Do you guys have any hot take guesses?
I don't know who.
I'd go with CRM could do it too. That could be one of them, but it could be multiples. We know Benioff is out there. I mean, think about the OpenAI stuff. Think about like, oh yeah, here, come on over. I got an open invitation. Benioff
for everyone.
Benioff is a businessman. He is making no friends ever. He's out there to do business there, and he talks his business. So he'll steal employees. Benioff will go out there. I mean, it's possible. That's Benioff style to come in here. He's spinning off this or doing this, but he likes that. It's not out of the question.
Benioff has made at least one friend, even if he maybe had to buy the friendship a little bit.
Jim Cramer?
Matthew McConaughey.
Oh, Matthew McConaughey. What about these commercials?
Salesforce pays Matthew McConaughey over $10 million a year, something crazy like that, to be
for advertising.
To be its spokesperson. And it's like, all right. I mean, people were making jokes about it when Salesforce had a big beat a year ago. They were like, oh, I guess that the money they're spending on McConaughey must really work. But then they did all these layoffs like a year ago, and people were like, oh, so you have the money to pay McConaughey $10 million, but not your employees, and you're laying off 1,200. But yeah, I mean, that's Benioff obviously not afraid to go out in the market and spend some money. So
I got one for you. Trading at a laggard, an ultimate laggard, trading at a 16 forward PE. Zoom. Zoom is down to the 6 forward
This is
PE
another
of
one
16.
where the moat to me is just not great, right? You have Microsoft Teams, you have Google
Too much
Meet, you have Zoom,
competition.
and it's just nothing is
Mhm,
that special to Zoom. If I think
mhm.
your long story here could just be that, hey, so many businesses are already using Zoom. It's so ingrained, it's not going anywhere. Eventually, the valuation is going to come up a little bit, but again, like this was always a huge growth story, and then now that the growth isn't there, then I'm not quite sure what the story is anymore.
What the streets looking at. Yeah, I mean the month. I mean it's had a nice run on the daily, just like everything else. But then you look at the monthly there, and you're like, well, is this thing ever gonna wake? Yeah, it's pretty easy to use, but like you said, it's all about the moat, and the PE doesn't mean anything if the E is still going
It's
down. So.
just, one thing is DocuSign basically has a monopoly on, their business. They're coming in and everybody uses DocuSign. Not everybody uses Zoom. So to AB's point, there's so much competition for Zoom. That's why it trades with a lower PE until they can show us that they come out with a new product that everybody wants. We started on Zoom years ago. We found StreamYard to be a better product. That's why we moved to it. So, I mean, there's, like I said, Microsoft Teams, Cisco WebEx. I mean, there's so many different streaming platforms here now that even though they were a verb in the pandemic, they are no longer a verb. And that's why I think I still stay away until you can show me a reason to come back. You need a new product, get away from being the one trick pony, because we don't want to have a GoPro on our hands here where they never figured it out.
Yeah, and I mean, like you said, the stock's been trading up. A lot of tech stocks are. Zoom is kind of a sign to me, or it's showing that not everything can be saved by just saying that we're using AI, right? Just because Zoom is saying in their earnings calls, "Hey, we're integrating more AI services," has not resulted in a big 50% run in the company. So I wonder if we're starting to see the market kind of lose the sparkle of AI a little bit, just in the sense that, hey, look, maybe just because Zoom's integrating AI, it's not to say, of course, that Google won't and Microsoft won't. So how much of a real difference maker is that?
I'm with you.
Yeah,
What
I mean,
about
Google and Microsoft, Gemini, Google and Microsoft. If you're playing the I, although AI did have a nice move at that little dip off earnings, but coming back, challenging that $32 level. If you're an AI bull, you want to see it clear. That's it. Been over 32 since early September. So love that level if you're trading AI. What are the analysts up to, Aaron?
so in the analyst world, we had another downgrade in a firm. This is, of course, the buy now, pay later stock, which has been doing really well. A firm had some very positive data on Black Friday sales. People were purchasing a lot of things with that buy now, pay later option. But we had a downgrade this morning from Morgan Stanley. Let me get the exact numbers pulled up here. The Morgan Stanley price target to downgrades a firm holding price target to $20. Wait, so interesting. So it was a downgrade from equal weight to underweight, but with a price target raise from 15 to 20. So that might be just more about market conditions and saying, hey, the market's obviously rewarding some of these laggards right now. But again, downgrade on a firm from Morgan Stanley. Stock is what, trading down 5% pre-market?
Yeah, and
Yeah,
you've
what do
got
you
a lot
think?
of people caught short this thing. I think there's underneath demand here now. I don't think this downgrade derails the whole thesis, but it has run a long way. So, you got to give it some room, maybe draw your trend line, but I think buyers step up here in the low 40s.
Let's see here. Buy the dip. If you've been shorting this, you got an opportunity. Trading down 237, still at the lows of the pre-market session. Let's see. Do we have any daily low in this area? Absolutely not. The next daily low comes in at 38.71. I don't know. I don't think we're going to see that. Also, this is a gift for people that just were selling into strength in the last 2 days, being down 237. What's the top? I don't think you're going to get to see the top of yesterday's range, but a lot of times with these upgrades and downgrades, you get going in one direction. It's either like, yep, okay, we're going to pound this thing all day, or people just come in, oh, no, this is a contrarian call. We're going to scoop it up. S&P's barreling north here, Dennis, up 16 handles. Watch the offers here. It looks
Yeah.
like we are heading for last week's high. Actually, the highs from last week, they're right next to each other on Thursday and Friday. So Quad Witch right now, they're trying to turn it in the 4,800 handle.
Significantly tough to derail this market here right now. Again, seasonality is playing into play. Money managers are all caught. They're all like looking at Powell and the Fed cutting rates, and they're like, oh my gosh, we're sitting with all this cash, and they're talking about cutting rates. There's just a reallocation of capital coming into the equity markets here. And I know, we've talked about it too, and I'm still sitting with a lot of cash in the long-term portfolio as well. But on dips, you got to put some of that back to work. So I think we'll get some opportunities here, folks. But that's why, you get a little bit of a dip in something in the markets. And you know what I'm looking at here too? Not only looking, at what the laggard trade is, but some of the leaders are starting to perk up here too. Check out NVIDIA. I mean, they were poo-pooing this, and I'm still long my NVIDIA, poo-pooing it for the last couple of weeks, ignoring it. It's pulling back down. It's like the story is over here. Valuation's too high. We're at striking distance of an all-time high in NVIDIA. So as much as they've went leaders to laggards, laggards to leaders, NVIDIA is starting to turn it around here again and is perking up. Also, SMCI, which I am long, moves along with that. It's perking up here too. Some of these stocks are just perking up a little bit here. So, keep an eye on those.
One thing that I noticed last week that I would say would be like the one thing I would say kind of scared about with this market right now is from the AAII sentiment survey last Thursday came out. There are like no bulls anymore. It's like it's a 52-week low on the percentage of retail investors that are bullish. More than 50% of people are bullish. Sorry, less than 20% of people are bearish. I feel like I kind of like to be a contrarian a lot of times, where if everyone's bullish, I'm like, all right, it can't be that easy.
Doesn't pay.
So I'm starting to wonder, if because everyone's now shifted, where 3 weeks ago it was the exact opposite. There was like more people bearish than bullish, and now so quickly the tides have shifted. If that means there's going to be some sort of reckoning or pullback or something going on, because I always like to think of the Max Payne scenario, right? Most people aren't when they're trading aren't making money, and there's a reason for that. The market's a ruthless place. So if I've got 70% of retail traders and everyone's buying calls, maybe I'd like to be the one selling those calls. I'm not quite sure, but I'm have no reason to be bearish about the economy right now, about the market, but that does scare me just a tiny bit.
The contrarian trade works the best January 1st. So you're like 8 days, Aaron, I'm probably going to be on the contrarian trade bandwagon here, but the momentum trade works the best during the Santa Claus period, which we are coming into in a couple of days here. I believe the Santa Claus rally starts Wednesday. The official is 2 days before and the 5 days after, correct? That's the way our good friend over at Stock Traders Almanac defines it, I believe. So I believe that would be Wednesday, if I'm doing my math correctly. That's the official time where they seem to come in. But the momentum, it's all about momentum during Santa Claus, and it's all about contrarian during January. That's how I've traded for 23 years. Doesn't work every year, but works a lot of years.
Well,
50% of the time, it works.
Final five
time.
trading days, 5 final trading days of December, and the first 2 days of January into the new year. So.
But Dennis, the market moves so fast. I mean, if we have a big pullback here for the next couple weeks, the contrarian trade by January 1st might be going long again. So
isn't that the craziest thing?
so you guys got to keep tuning in every morning to figure out what the market's doing, and we'll be able to say.
Well, that's what I was looking. I was looking to buy all this IWM junk that's beat up January 1st, but it's run so far that it could end up being this short on the contrarian trade.
It's tough.
The craziest thing ever.
I know, you got to stay nimble in these markets. Speaking of the small caps, someone who's had a very big year in 2023. I mean, a lot of investors hopefully have made a lot of money, considering the S&P 500 is up damn near 20%. But Cathie Wood has had a huge year. ARKK up a lot. One of her old darling stocks, though, Roku, got another downgrade this morning. And this is one of those stocks that looking at the monthly chart here, you can see it's still well off its highs. But when you zoom in, it's kind of like Snapchat, still well off its highs. But when you zoom in the last couple months,
And
it's
the
up
dailies.
it's up a ton. So Roku this morning, let me pull up the exact let's see, the downgrade coming from Seaport Global, downgrades Roku to sell, announces $75 price target. This is not a stock that I love, but again, we're not talking about stocks and companies we love right now. We're just talking about stocks that the market's rewarding. What's the price action say here, Joel?
Well, once again, a little gift to the Bears over the last couple days, and there's not many gifts to the Bears at all. Trading down in the pre-market. The only thing I give you here is there's 3 lows in the 92 handle. So if you're waiting for more on this one, maybe just hawk the like the 92.40, 92.50 area. But once again, in this market, something's opening down $3. Who cares if someone else says it's only worth 75? You could be shorting this thing in the hole, and then boom, it's at the bottom of yesterday's range that comes in at 96.54. So, Dennis, any technical or fundamental thoughts on Roku?
Well, I hate it fundamentally. I've called this TiVo for a very long time correctly because it's come down from $500 down to $95. I still think it's TiVo, meaning that it's a one-trick pony that's just trying to get streaming online. And now it's all built into the TVs. Sometimes Roku's built in the TVs as well, but they're all smart TVs now. You don't need your little contraption anymore. Every TV that I bought doesn't need a Roku anymore. And now, again, like I said, sometimes Roku is the one that's actually built into it. But when the little box sales aren't going to be box sales forever. So I absolutely hate this company fundamentally. Is there a laggard trade here coming in the new year? Maybe. I'm too early to strike, though, for that. So review this January 1. Let's see where it's at.
TiVo used to be publicly traded, right?
TiVo, yeah. TIVO.
Who bought
TiVo?
Someone bought TiVo.
I don't know if anybody bought TiVo. I don't even know if it survived.
Rovi Corporation in 2016 acquired TiVo.
What did they pay for it?
$1 billion.
And at one point in time, it was probably worth multiple billions. So.
Oh, 100%. I mean, when TiVo came out, I still remember that. I was a kid, and it was like the coolest thing in the world.
Cool.
I'd get home from school, and you could just go, I'd have all my shows recorded, everything. It was awesome.
Yeah.
Dennis, I got a real laggard for you here. SunPower. Goldman Sachs. You talk about good timing on something. At 742, Goldman Sachs downgrades SunPower to sell, lowers price target to $4. At 845, SunPower Corp says substantial doubt exists as a company able to continue as a growing concern.
Oh, this ultimate fall from grace. And I may have never played a stock better in my long-term portfolio than I did on SunPower. I bought stock in early 2020 at, I believe, $6. And I sold that stock in my long-term portfolio. I believe I averaged out at $49 1 year later. And the reason I was selling was this gun just so far. I'm like, and again, I was liquidating the portfolio in early 2021 because I was worried about the Fed starting to raise rates. So I had went to a lot of cash back then. And this was just one. It was sitting there, and I didn't want to pay the tax on it, because I was up like 800% on it. So basically it was all tax. But I'm like, you know what? I got to take it. So I did, and I sold it, and I never rebought it. I think I tried to play it a couple times, so I might have got stopped out once or twice on it, but never really had it. I mean, now you're talking about going concern, so you can say, yeah, well, this is a real laggard. This is the kind of trade. But when they're talking about, potentially not, being able to survive as a going concern, I mean, when the going concern word comes out, that means bankruptcy is often around the corner. So hard to just come in here and say, well, yeah, I think we're going to bounce, though. I don't like hearing talks about bankruptcy ever.
Usually not a good sign, unless there's an acquisition on the other side and you're just taking a stab at that. Let's see. Any final notes? 9 a.m. now, 30 minutes away from the open. Anything we got to touch on? I just now, Dennis, thought of one laggard that has not moved at all in the positive direction. I can guarantee you, though, you're probably not going to like it.
Yes.
Alibaba, ticker Baba, still trading at like $73. I don't know. I'm starting to maybe like
Perk up.
could I take a stab at this in my long term?
Let's
Do I
get
want
rid of
it?
that tax loss selling and let's buy this thing January 1.
All
Greatest
right.
setup would be it kind of just comes in a little bit. Tax loss selling brings it down and we buy it January 1. If it's sitting at $74 January 1, I may get on board AB. I can't
Look,
do it
you're
right
talking
now.
about the
because
biggest company in one of the
I
biggest
know.
countries in the world. Eventually, this thing's got to have some buyers and get.
They need
And the
cheated.
valuation. You know what
Yeah,
the PE is? Joel, do you know what the PE? Take a stab at what you think the PE is on Baba.
8.
It's 7. It's 7.
Well,
I
and you
mean,
have
is this the ultimate value trap or the best buy ever?
it's
I
one or
don't
the
know
other.
the
It's
answer to that question.
it's one or the other, Dennis. What I will say, like the only thing I like about it's like it's similar to Amazon, to where they're like cloud services, stuff like that seems to be their biggest growth driver in China. Of course, they talked about breaking that up to where you could, if you own Baba, then you would own shares of just their cloud computing portion of it. I'm not sure what happened on that because like the stock bounced when they made that news 6 months ago or so, but then I don't know if they've since then nixed that idea or what. But either way,
people are afraid. People are just
afraid.
afraid. Yep,
They're
they're
afraid of a
afraid.
Taiwan invasion. They're afraid of owning Chinese companies.
Yep.
They're afraid that regulation, we know the way, the reason this started was Jack Ma went missing. I mean, this was $300 stock and the Ant IPO gets canceled and then Jack Ma goes missing. And I'm like,
not a good
that's
sign
when I
when you're.
sold. I'm like, I'm out. When the CEOs start going missing, and
Never.
again, I guess he was okay, but that was the main reason that I sold my long-term Bob at $240 because I was
Usually
like,
not a bullish
I'm not
sign.
involved when the CEOs start going missing. That's enough for me. I'm not messing with China here. I'm out. And I have not rebought it. I want to rebuy it.
Was
but
going long Baba one of Munger's last big trades before he passed? Because that could be, we might need to
when did
honor.
he go long?
He went long.
He went long. He got out too. He got.
Is he
He
out?
He said
yeah.
it was one of his worst trades ever, and then in the last year. So he bought. I think he bought like a year and a half, couple years ago, and then ended up selling 6 months or a year ago, and he got out. But either way, if he saw something that he liked in it from the value standpoint, then who's to say we shouldn't, Dennis?
I love the value of it. If this was a company in the USA, I would be. This would be the okay. I'll say this: if Baba was in the USA, this would be the largest position in my long-term portfolio, the largest. But it's not, and I can't control what the next step is over there, and I can't control what Chi is thinking, and I can't control the whereabouts of Jack Ma. So all that put together makes me skeptical that this stock is just going to turn it around. Now, with that being said, could I get talked into a laggard trade on January 1 in Alibaba? Yes, I could.
I mean, what's going to happen, Dennis? Is
I'm rating Baba on January. In fact, let's start the list today.
We're
getting the piece of paper. Look at this.
There's gonna be a lot of stocks on there.
January effect.
January 1st.
Laggards. Number 1 on this list.
Dennis, what's gonna happen is everything's gonna set up perfectly. The chart's gonna look great. We're gonna get in. We're gonna have all his value, and then the next day, Jack Ma's gonna go missing again, and then or
China's gonna pay Taiwan, and Alibaba opens down 75%, or doesn't open at all. In the case of like Russian,
never opens.
Oh my god,
never opens.
Worst thing ever.
But either way,
listen to the pre-market prep again ever. But we're running long in the tooth here. It's 9:04, so we're gonna wrap things up here. And so we're coming at the end of the year, and we've always had one guy that's great with predictions, and he's not going to be able to make next week's end of the year show. But who do you think would be a good guest to wrap up the year and talk about next year? Over the years, this guy's made some tremendous calls. Dennis, I'll give you one and only guess.
Oh, this is so tough. We have so many good guests.
He was back in October, and he was telling us to buy the IWM.
Well, that's Ryan Dietrich.
Well, there was another guy that was on the same week, and it's not the cow guy.
He's trying us to buy.
He also helped us out during COVID.
Oh, is it Mark Chaikin? They just showed it.
Not shaking. Not shaking.
Not shaking either.
Is it my man hit the bid?
No.
Kenny's always right. Kenny's one.
Yeah, we gotta
Kenny
get
is
Kenny back.
awesome. We love Kenny.
Because if he's not right, he's flipping. He's changing his
He
mind.
flips.
And
Oh yeah, Kenny makes himself right. That's why
You
he's
know
an
what?
awesome trader.
Dan Back is going to be the new co-host of Pre-Market Prep because he got it with Craig Johnson.
Oh, Craig Johnson's always good. We
Yep.
know Craig. Craig's always
Yep.
good.
Yep.
We love Craig.
So-
Craig's been coming on the show for years. We love Craig Johnson.
Okay. All right, AB. Good job there. Go grab your ice skates and get a little workout there in the ice rink behind there.
Yeah. Hopefully it turns around. I don't know where you guys were, but it was cold, rainy, this morning. But we'll see if it gets nicer out, Joel. You'll see me out on the ice rink doing some tricks. Still learning how to hockey stop though. If I learn how to hockey stop this year, that's my goal.
Oh, Dennis can teach you that, man. Dennis can do that. But
Dennis
all right, everyone.
Dennis is not as good as he once was on anything. I'm getting older now here.
All right, guys.
My
Thanks for
skating is
joining
limited
us.
now, too. I just skated my kids.
And we'll be back with you tomorrow morning.